All right, buckle up for another deep dive. Today, we're zeroing in on something you specifically requested. Marico Ltd's Q2 performance for fiscal year 25.
Oh yeah, this is going to be interesting.
They're a big deal in the Indian consumer goods market, especially those beauty and wellness categories. You probably know them for their parachute coconut oil.
And for this deep dive, we've got the official company statements, their detailed earnings presentation, even some insights from their auditors, BSR & Co., LLP. Lots to unpack here.
We've got our detective hats on for this one, and the findings are pretty intriguing. Marico's managed double-digit growth despite all the economic uncertainty in India right now.
Not to mention their expansion strategy, Project Set To, which is making some serious waves.
We'll get to all that, but first, can you set the scene for us? What's the economic backdrop in India right now? How is it affecting the consumer goods sector?
Well, imagine a market where prices for just about everything are going up. Food prices, retail inflation, it's all on the rise. Plus, India's seen above-average rainfall, which, can impact agriculture and push food prices even higher.
A real domino effect.
Yeah, exactly. But here's where it gets a bit tricky. Despite these challenges, the festive season in India, combined with the government's continued spending, usually leads to a boost in consumer spending. So it's a mixed bag.
A real push and pull. So how did Marico navigate these tricky waters? Give us the rundown on their overall performance.
Well, they're surfing those waves pretty skillfully, it seems. Total revenue went up by 8% compared to last year. And domestically, they saw a 5% increase in sales volume. That means people are buying more. And internationally, even accounting for those currency differences, their business grew by a solid 13%.
That's impressive, but did that translate to profit? Bottom line, right?
Absolutely. Profit after tax, excluding those one-time gains, shot up by 10% compared to last year. Gotta mention those one-time gains, though. They came from selling off fixed assets and a favorable outcome in a legal case. Totaled about 42 crore rupees. But for this analysis, we're focusing on that core profit growth, the stuff that's not from one-off events.
Focusing on the fundamentals. Let's dive deeper into their domestic operations. Let's start with the big one, parachute coconut oil. Everyone knows that one. How'd they do?
Parachute coconut oil's shining. They saw a 4% jump in sales volume, a strong flow of products from retailers to consumers, and a 10% revenue boost. All leading to a gain in market share. Always a good sign.
They must be doing something right. Any interesting tactics behind those numbers?
Absolutely. Instead of just jacking up prices, they got a little creative. They actually made one of their standard packs slightly smaller. It's subtle, helps manage those rising costs without hitting consumers with a sudden price hike. But, those rising copper prices, that's what coconut oil is made from, they did have to increase prices a bit by the end of the quarter.
A delicate balancing act, keeping things affordable while keeping the business profitable. Speaking of affordability, how did their value-added hair oils do? Riding the same wave?
Not quite. That segment actually saw an 8% dip year on year in value terms. Basically, people spent a little less on those products. Slower demand seems to be the culprit, especially for those more affordable options. Plus, the competition is fierce out there.
Not all sunshine and rainbows, then.
True, but it's not all doom and gloom. They actually gained 1.1% in value market share, thanks to how well their mid-range and premium hair oils are doing. And those marketing campaigns they've been running have been pretty effective. So the future for this segment isn't necessarily bleak.
Okay, mixed results for the value-added hair oils. Now on to Saffola edible oils. You mentioned a turnaround story, and I'm all ears.
This is where it gets interesting. Sales volume for Saffola oils stayed pretty flat, but get this, their revenue actually climbed by 2% year on year. The reason? The pricing situation finally swung in their favor after a tough 8 quarters.
Finally catching a break.
Exactly. They've even gone ahead and implemented a 15% price increase. A necessary move because of those higher import taxes on vegetable oils. Global supply chain woes, right?
Makes sense. Any standout marketing campaigns for Saffola oils we should know about?
Well, their World Heart Day campaign caught my eye. Step up for your heart was the tagline. They linked climbing stairs with better heart health. Clever, right?
I love it when brands get creative with health promotion. All right, on to their foods category. How did that perform?
Foods had a stellar quarter, 28% growth year on year in value. They've actually hit a 1,000 crore rupee annualized run rate. That means if they keep up this pace, they'll be hitting that 1,000 crore mark annually.
Now that's what I call growth. What's driving this success?
Well, Saffola oats continue to be a big contributor. They're growing at a nice, steady pace. And they launched a new product, Saffola Masala Millets, clearly targeting those health-conscious consumers.
Smart move, jumping on the millet trend.
Definitely. And let's not forget their acquisitions, True Elements, and Plix. Those are adding to this growth as well, especially with their plant-based offerings.
Speaking of acquisitions, let's talk about their premium personal care segment. How are those digital-first brands doing?
Premium personal care is on fire. Those digital-first brands are really driving it. They crossed an annualized run rate of 525 crore rupees this quarter. It's pretty incredible.
Massive growth. Any standout brands in this segment?
Beardo is the star, consistently exceeding expectations. They're actually on track to hit a double-digit profit margin this year. And, we often talk about profit margin as a percentage, but to make it real, for every 100 rupees Beardo makes in sales, they're keeping a good chunk as profit, even after all their expenses.
Now that's impressive. What about just herbs and Plix? Are they gaining ground?
They're definitely making waves. And here's an interesting tidbit. They've started selling Kaya products through some online channels. Seems like they're going for an omni-channel strategy. Meeting customers wherever they are, online or in a store.
Makes perfect sense. Okay, before we get into their international business, let's unpack Project Set 2. Can you break it down for us? How's it contributing to Marico's success?
Think of Project Set 2 as Marico's strategic game plan to connect directly with customers and boost their distribution network. This quarter, they expanded it to 4 more states, bringing the total to 10.
So getting closer to customers both in urban areas and those more rural areas.
Exactly. And they're using tech to do it. Identifying those gaps in their distribution network, it allows them to expand strategically, make their sales force more efficient, and ultimately grab a bigger slice of the market across those different product categories.
It's a recipe for success. Now, let's turn our attention to their international ventures. Key highlights.
Their international business is thriving. They saw a 13% growth in constant currency terms. Really shows their global reach.
Fantastic. Any specific regions worth mentioning?
Bangladesh is a good example. Despite some economic hiccups, they managed to grow by 8% in constant currency terms. Shows their resilience in that market.
Really weathering those storms.
And Vietnam's bouncing back with a 7% growth. Driven by, you guessed it, a resurgence in demand for those personal care and hygiene products. But the real star of the show is the MENA region. They achieved a whopping 43% growth, mostly thanks to strong performance in those Gulf countries and Egypt.
43%, that's mind-blowing.
It is. And finally, South Africa delivered a solid 20% growth, thanks to their hair care and healthcare portfolios performing well.
So Marico's hitting it out of the park, both domestically and internationally. Now for the big question, what does the future hold?
Well, the outlook is generally positive. Demand trends are encouraging, the monsoon season's been good, government spending continues, and let's not forget the festive season, all pointing towards continued growth.
Sounds promising, but are there any potential roadblocks?
Of course, there are always challenges. That rising food and retail inflation we talked about, yeah, that needs to be watched closely. It'll directly impact how much consumers are willing to spend.
It's a delicate balance. How is Marico planning to keep up this growth amidst these potential challenges?
They've got a few key strategies in play. First, they're going for a gradual increase in growth within those core product categories. This involves sticking with initiatives like Project Set 2 and figuring out ways to improve the profitability of their general trade partners, the folks who help get their products to the consumers.
So a mix of deepening their reach and empowering their partners.
Exactly. Aggressive diversification is another big focus. They're rapidly expanding their foods and premium personal care portfolios. They're aiming to actually double the size of their foods portfolio by FY27 and double the exit annual run rate of those digital-first brands by the same year. Think of exit annual run rate as a projection of their future revenue if everything keeps going as it is now.
That's ambitious. Do they expect these new segments to really move the needle on the revenue?
Absolutely. They're aiming for these two, foods and premium personal care, to contribute around 25% of their total revenue by FY27.
A significant chunk of their business then, but rapid growth sometimes means sacrificing profitability, right? How do they plan to balance both?
You're right, that's a crucial point. They're very focused on improving profitability, particularly in foods and those digital-first brands as they grow. They've already made some big improvements in their food supply chain and how they get their products to consumers. This actually led to a nice boost in their gross margin in FY24. That's the profit they make after subtracting the direct costs of producing their goods. They're expecting this trend to continue as they refine things further.
Efficiency is key. What about the digital-first brands on a similar track?
Oh, yeah. We mentioned Beardo is expected to hit a double-digit EBITDA margin this year. That's earnings before interest, taxes, depreciation, and amortization. It's a key measure of a company's operating profitability. And the plan is to replicate this success with those other digital-first brands, aiming for double-digit EBITDA margins across the whole portfolio by FY27.
Another ambitious goal. And their international business, what's the plan there?
They're planning to keep that double-digit growth momentum going strong. They're going to diversify their products even more, expand into new regions, and increase their market share in the markets they're already in. Bangladesh should stay on that double-digit growth path, and MENA and South Africa also have a lot of potential for growth.
It sounds like they have a solid roadmap for the future. Okay, before we wrap up this part of our deep dive, let's highlight those key takeaways from Marico's performance this quarter. What should our listeners remember?
Well, first, that overall revenue growth of 8% year-on-year is a big one. Especially that 5% growth in sales volume domestically shows they're handling a complex economic situation effectively.
Definitely a standout point. What else is worth highlighting?
Their profitability, minus those one-time gains, remains strong. 10% increase in profit after tax. That shows they can manage costs and keep those profit margins healthy, which is crucial with prices going up everywhere.
Right. Anything else?
The performance of individual products is interesting too. Parachute coconut oil is still a star, and that turnaround for safflower oils is definitely noteworthy.
Absolutely. And let's not forget their diversification strategy, particularly those foods and premium personal care segments. Aiming to double the size of those portfolios by FY27 is a bold move. It could really change their revenue mix in the years to come.
Totally. And their focus on profitability in those new segments is crucial for long-term sustainable growth.
Excellent points. We've covered a lot in this first part of our deep dive, but before we move on to dissect their financial performance in more detail, what stood out to you so far? What's piqued your interest?
That's a good question.
Okay, let's dive into those numbers. Time to see what's really going on.
Absolutely. When you look closely at their profit and loss statement, you can see their revenue growth is coming from two main things: higher sales volume and, strategic pricing. Remember, their total revenue shot up to a whopping 2,664 crore rupees, an 8% jump.
Impressive. But usually growth comes with, rising expenses. Were they able to manage those?
They were actually very disciplined with their spending. Material costs, which include everything from raw materials to packaging, went up 7% to 1,311 crore rupees. But to balance that out, they strategically raised their average selling price. Think of it as the average price of all their products combined. That went up by 8%, bringing in an extra 290 crore rupees.
It's like a balancing act, managing costs while using their pricing power effectively. What about those other expenses, like, employee costs and advertising?
Employee costs actually increased by 14%, reaching 213 crore rupees. This is probably due to, general inflation and their investments in expansion, and advertising and sales promotion costs. They went up 8% too, totaling 290 crore rupees for the quarter.
So investing in their people and their brands, did this impact their profit margins at all?
Well, this is where it gets interesting. Their gross margin actually expanded, went up about 0.3%. Gross margin is that profit they make after subtracting the direct costs of actually producing their goods. So this tells us they were pretty successful in passing on some of those increased input costs to consumers, through those slightly higher prices.
So that's good news. What about their EBIT margin? You mentioned that earlier as a key profitability indicator.
Yes. Well, their EBITDA margin dipped a tiny bit, went down about 0.5% and settled at 19.6%. EBITDA helps us understand a company's operating profitability. You strip away things like interest and taxes to get a clearer picture.
Is that dip something to be concerned about?
Not necessarily. Remember those increased advertising and sales promotion spends we talked about? Well, those affect the EBITDA margin. If you look at their EBITDA before you factor in advertising and sales promotion, it actually edged up a bit. This suggests that their core business operations are still very strong.
I see. Looking at the numbers from different angles to get the full picture.
Exactly. Now, shifting gears a bit, their working capital, think of that as the cash they need to keep things running smoothly day to day. Well, the time it takes them to collect payments from customers went up a little, from 38 to 42 days.
So they're waiting a bit longer to get paid. Could this be a sign of, some pressure in the market?
It could be. Definitely something to watch. But the good news is that the time it takes them to sell their inventory stayed stable at 47 days. So they're managing their inventory levels pretty efficiently.
That's reassuring. Now let's talk market share. Did they gain any ground compared to their competitors, or did they lose some?
The data shows that over 80% of their domestic business either gained market share or held steady. That's pretty impressive.
Definitely a sign of strength. Any particular categories where their market share performance stands out?
Parachute coconut oil solidified its dominance. They now hold a 63% volume market share. Safal oats are still the top dog in their category, with 41% market share. And their value-added hair oils are holding strong with 28% value market share. They've also been steadily growing in the premium hair care segment.
Okay, so pretty solid performance across the board. Let's zoom in on their diversification strategy. We talked about their goals for the foods and premium personal care segments. How's that all progressing?
You can see their commitment to diversification in the numbers. The combined revenue from foods and premium personal care, including those digital-first brands, reached about 21% of their domestic business in the first half of this fiscal year.
So those acquisitions and investments are starting to show results. But we talked about profitability earlier, and it's key. What are they doing to make sure these new ventures are turning a profit as they grow?
They've got a multi-pronged approach going on. For the food segment, they've achieved a structural gross margin expansion of about 8% in FY24. Let me break that down. They've made their food business more profitable by streamlining their supply chain and optimizing how they get their products in front of consumers.
So making their operations more efficient.
Exactly. And they expect these margins to improve even more as they scale up their operations and hit that critical mass point. You get big enough to really benefit from economies of scale.
Makes sense. What about those digital-first brands? Are they headed in the same direction profitability-wise?
They are, yeah. We talked about how Beardo is expected to reach that double-digit EBITDA margin this year. Pretty remarkable, really.
They've managed to turn Beardo into a profitable venture pretty quickly. Impressive.
It really shows how effective their strategy for acquiring and integrating new brands has been, and they're aiming to do the same with their other digital-first brands. The goal is double-digit EBITDA margins across the whole portfolio by FY27.
Sustainable, profitable growth. Got it. Now let's focus on their international business. It's been a big win for them, consistently delivering double-digit growth. How do they plan to keep this momentum going?
Their international strategy is based on three main things: diversification, expansion, and gaining market share. They're constantly diversifying their product range in each market to cater to local tastes. They're also expanding their reach by entering new markets and strengthening their presence in existing ones. And of course, they're always looking for ways to increase their market share through new products and targeted marketing campaigns.
So a balanced and strategic approach. How's this international growth contributing to their overall profitability?
Interestingly, their international business actually has higher profit margins compared to their domestic operations right now. It's partly because of the products they sell in those markets and how each region operates.
So the strong growth in their international business helps balance out any pressure on margins they might be facing domestically.
Exactly. And as they continue to optimize their operations and expand globally, we can expect their margins to grow even more in the coming years.
Okay, let's zoom out for a second and look at the bigger picture. We know Marico is doing well, but how do they measure up against their competitors in the Indian consumer goods market? How do they stack up?
That's an important question. Comparing them to their rivals helps us understand where they stand in the competitive landscape.
Exactly. Do we have any data or insights to help us with that?
Unfortunately, the sources you provided don't have specific data on their competitors.
That's okay. We can still make some general observations. Based on their growth rates and profitability, it seems like they're outperforming many of their peers, especially considering the challenging economic conditions we talked about earlier.
I agree. They've consistently increased their market share in their core categories, and their aggressive diversification strategy suggests they're well-positioned for continued success.
Definitely a company to watch. One thing that stood out to me is their commitment to ESG. You know, environmental, social, and governance factors, they seem to be very active in this area.
Yes, their ESG initiatives are definitely worth noting. They've made significant progress in reducing their environmental impact. Things like minimizing waste and reducing their carbon footprint. They're also promoting sustainable agricultural practices and working to empower communities.
It's great to see a company of their size making ESG a priority.
It's a win-win situation. Their commitment to ESG not only benefits society and the environment, but it also strengthens their brand and attracts investors who are increasingly focused on sustainability.
Okay, let's switch gears and talk about the risks and opportunities Marico faces moving forward. Every business has its own set of challenges and prospects, right?
Of course, no business operates in a vacuum. So what potential risks should we be aware of?
Well, one that immediately comes to mind is the unpredictable nature of commodity prices. Their business heavily relies on agricultural commodities like copra for their coconut oil and vegetable oils for their edible oils. Those prices can fluctuate quite a bit depending on global supply and demand.
That's a valid concern. If those input costs spike suddenly, it could squeeze their profit margins, especially if they can't raise prices to compensate.
Exactly. Another risk is that the consumer goods market is incredibly competitive. New players, both domestic and international, are constantly emerging, and consumer preferences are always in flux.
Very true. Marico needs to constantly innovate and stay ahead of those ever-changing consumer trends to stay competitive.
And then there's always the risk of an economic slowdown. If people start tightening their belts and cutting back on spending, Rico's sales will definitely feel the impact.
Absolutely. Their market is very sensitive to economic fluctuations.
Okay, we've talked about the potential risks. Now let's look at the flip side. What opportunities do you see on the horizon for Marico?
Well, their diversification strategy is a major opportunity. The foods and premium personal care segments are still relatively new for them, and there's a lot of room for growth in those categories.
Yes, they're tapping into new consumer needs and preferences, particularly the growing emphasis on health and wellness.
Exactly. And those digital-first brands are in a prime position to capitalize on the booming e-commerce market in India.
Right. They're leveraging technology to connect with new customers and build brand loyalty.
International expansion is another big opportunity. They've already established themselves in several markets, and there's plenty of room to grow, both organically by expanding existing operations and through acquisitions.
So they have global aspirations. Anything else?
Innovation will be key to their continued success. They're investing a lot in research and development to create new products and enhance their existing ones. That focus on innovation will help them stay ahead of the competition and capture those emerging consumer trends.
They're not resting on their laurels. They're actively looking for ways to innovate and expand their reach.
Exactly. And they have another major advantage: strong brand equity built over decades. Consumers trust their brands. That's a solid foundation for launching new products and entering new categories.
Makes sense. Now let's circle back to their financials for a moment. We've discussed profitability, but what about their cash flow? How is their cash generation looking?
Their cash flow from operations, that's the cash generated from their core business activities, has been consistently strong. They generated 375 crore rupees from operating activities in the first half of FY25.
Impressive. What are they doing with all that cash?
They're reinvesting it strategically to fuel future growth, both through organic expansion and acquisitions. For instance, they're boosting their manufacturing capacity, strengthening their distribution network, and investing in new technologies. They're also using that cash to fund acquisitions that align with their goals, like the acquisitions of Plix and Just Herbs.
They're putting their money where their mouth is.
And they're also rewarding their shareholders. They're doing that through dividends and share buybacks. That strong cash flow allows them to take a balanced approach that benefits both the company and its investors.
Okay, so their financial foundation is looking pretty solid. Now let's get into the nitty-gritty and explore their performance in different categories.
Sounds good. Let's start with their flagship product, Parachute Coconut Oil.
Perfect. Tell me everything.
Parachute Coconut Oil is still a star performer. They had a 10% revenue growth in Q2 FY25. That growth comes from a combination of higher sales volume, price increases, and gaining even more market share.
What were the main drivers behind that volume growth?
Well, their volume growth was driven by strong offtakes. That means retailers are selling a lot of their product to consumers. They also benefited from their decision to slightly reduce the volume in one of their key price point packs instead of directly raising prices. That helped them keep their products affordable, especially in a market where price sensitivity is a major factor.
That's a clever strategy to manage rising costs without turning off those price-conscious consumers.
Exactly. And they did implement a price increase of about 4% across the brand towards the end of the quarter. That move will likely boost their revenue growth even more in the coming quarters.
Makes sense. How about their market share? Are they holding steady or making gains?
Parachute Coconut Oil is the undisputed leader in its category, commanding a 63% volume market share. And they've further strengthened their position, gaining about 1.2% in market share compared to last year.
That's impressive. It seems they're doing everything right in that segment. Now, let's shift our focus to their value-added hair oils portfolio. I recall they've faced some headwinds in that area.
Yes, their value-added hair oils portfolio has been facing some pressure. It's a combination of sluggish demand, people just aren't buying as much, and intense competition, especially in the lower end of the market where price is a bigger factor.
So what are they doing to tackle these challenges and get back on that growth track?
They're focusing on a few key things. First, they're investing in brand building and marketing campaigns to re-engage consumers. They're also focusing on premiumization, targeting consumers who are willing to spend a bit more for higher quality products with unique benefits.
So a combination of brand building and product innovation.
Exactly. And they're working on expanding their distribution network to reach more customers. Their Project Set To initiative is playing a crucial role in this, especially in rural areas where those traditional distribution channels might not be as strong.
They're not giving up on this segment. They're proactively looking for ways to turn things around.
Exactly. And their recent gains in market share within the mid-range and premium segments of the value-added hair oils category show that their efforts are starting to bear fruit.
That's encouraging. Now let's move on to Saffola edible oils. They had a pretty interesting story this quarter, didn't they?
Yes, Saffola edible oils had a nice comeback. In Q2 FY25, their revenue grew by 2% year-on-year. That's a welcome change after 8 quarters of struggling with pricing.
So what finally turned things around for them?
Two things really contributed to their turnaround. First, the pricing cycle finally shifted in their favor. They were finally able to increase prices without significantly impacting sales volume.
So they were able to pass on some of those increased input costs without scaring away customers.
Right. And second, they made the strategic decision to raise prices by about 15% to offset the recent hike in import duties on vegetable oils.
Makes sense. Were there any notable marketing campaigns for Saffola edible oils this quarter?
Their Step Up for Your Heart campaign for World Heart Day was pretty clever. They highlighted the heart health benefits of climbing stairs.
Okay, so Saffola edible oils seems to be back on track. Now let's talk about their foods category, which has been a real growth driver for them.
Their foods category had an impressive 28% year-on-year growth in value in Q2 FY25.
What's behind that incredible growth?
Well, several factors are at play here. Saffola oats are still doing well, and their new entry into the millets segment, Saffola Masala Millets, is showing early promise. They're clearly catering to the growing demand for healthier, more nutritious food options.
They're definitely riding that health and wellness wave.
Exactly. And their acquisitions, True Elements and Plix, are also playing a role, especially with their plant-based products.
Right. They've built a solid portfolio of brands that seem to be meeting a wide range of consumer needs in the food space.
Yeah, they're well-positioned to grab a bigger share of the growing health and wellness market in India.
Okay, before we jump into their premium personal care segment, I want to highlight one important thing that underpins their success in the foods category: their focus on profitability.
That's a key point. While growth is great, they're also making sure their foods business is making money. Their efforts to streamline their supply chain, optimize their go-to-market strategy, and achieve economies of scale have led to a big improvement in their margins.
So they're not just growing for growth's sake, they're building a sustainable business model.
Exactly. They're aiming to achieve consistently healthy profit margins in their foods business as they scale up and expand their market share.
Okay, now let's shift our focus to their premium personal care segment, specifically their digital-first brands. This is a segment that's generating a lot of excitement.
Absolutely. Their premium personal care segment, driven by their digital-first brands, has been a huge success story. These brands crossed an annual run rate of 525 crore rupees in Q2 FY25. That shows you just how quickly they're growing.
What's the secret sauce behind their success in the digital-first space?
They've really embraced an agile and consumer-centric approach. They're using data and analytics to understand what consumers want and how their preferences are changing. And they're quick to adapt their products and marketing strategies accordingly.
So they're operating like a startup even within a large, well-established company.
Exactly. They're also really good at using social media and influencer marketing to reach a wider audience and create excitement around their brands. And they're not afraid to try new things and experiment with different channels, which is essential for staying ahead in the rapidly changing digital landscape.
It sounds like they've really figured out how to succeed in the digital world.
I think so. Their brands like Beardo, Just Herbs, and Plix's personal care line are really connecting with consumers who want premium, unique products and a strong online presence.
Okay, let's break down some of those individual brands in the premium personal care segment. Let's start with Beardo, which seems to be a real standout.
Beardo has been a fantastic success story. It's grown like crazy since Marico acquired them, and it's now set to achieve a double-digit EBITDA margin this year.
What's behind Beardo's impressive growth and profitability?
A few key things have contributed to their success. First, they've focused on a specific niche, men's grooming, and they've built a comprehensive range of products to meet the needs of that target audience.
So they've really honed in on their target market.
Exactly. They've also developed a strong brand identity that really resonates with their audience. Their messaging is edgy, confident, and aspirational, which appeals to their customer base.
And their digital marketing strategy seems to be working really well for them.
Yes, they've been very effective at using social media and influencer marketing to broaden their reach and create a buzz around their brand.
Okay, so Beardo is like a textbook example of how to build a successful digital-first brand.
I'd agree with that. They've combined a great product lineup, a compelling brand identity, and a data-driven marketing approach to achieve some really impressive results.
Now let's talk about Just Herbs, another one of their acquisitions.
Just Herbs has also been gaining momentum in the premium personal care space. Their focus on natural and Ayurvedic products has really resonated with consumers who are looking for clean and sustainable beauty options.
So they're capitalizing on the growing trend of natural and organic products.
Exactly.
Yeah.
And their digital-first approach has allowed them to reach a wider audience and build brand awareness more efficiently.
Okay, what about Plix? I understand they're relatively new to the personal care market.
That's right. Plex initially gained popularity for their plant-based nutrition products, but they've recently expanded into personal care, and their initial offerings have been well received.
So they're using their existing brand recognition and customer base to break into new categories.
Precisely. And their focus on plant-based and natural ingredients aligns with the increasing consumer demand for sustainable and ethical beauty products.
Okay, so it seems like Marico has put together a really impressive portfolio of digital-first brands.
I agree. Their acquisition strategy has been very successful in diversifying their portfolio and really solidifying their presence in the fast-growing digital-first brand market.
I want to touch on one more interesting move they made, selling Kaya products through select online channels.
Yes, that's worth noting. Kaya is a well-known brand, known for its professional skincare solutions. By offering those products online, Marico is essentially expanding Kaya's reach and tapping into a new customer base.
It's a smart move, leveraging their digital infrastructure and capabilities to promote and sell Kaya products.
For sure. It's all part of their omni-channel strategy, creating a smooth customer experience across different channels, both online and in physical stores.
Okay, we've talked a lot about Marico's domestic business. Now, let's shift gears and talk about their international operations. They've consistently delivered double-digit growth internationally. Which specific regions are driving that growth?
Their international business is doing fantastic. Bangladesh, despite facing a few economic challenges, is still a big contributor. They saw 8% growth in constant currency terms in Q2 FY25.
What's the secret to their success in Bangladesh?
They've built a really strong presence there over the years. They have a deep understanding of the local market, and their brands, especially Parachute coconut oil, are trusted by Bangladeshi consumers.
So it's a combination of strong brand recognition and localized strategies tailored to the Bangladeshi market.
Exactly. And they've recently been focusing on diversifying their product range in Bangladesh, getting into new categories like hair care and personal care, which is further strengthening their position in the market.
Okay, apart from Bangladesh, what other regions are contributing to their international growth?
Vietnam is another promising market for them. After a bit of a slowdown, they've bounced back with 7% growth in constant currency terms in Q2 FY25. The recovery in demand for personal care and hygiene products is driving that rebound.
So they're riding the wave of post-pandemic recovery in Vietnam.
Exactly. And the recent investments in expanding their distribution network and boosting their brand presence in Vietnam are paying off.
Okay, and how about the MENA region? I recall they saw exceptional growth there.
The MENA region is a rock star for Marico. They achieved an incredible 43% growth in constant currency terms in Q2 FY25. That's driven by strong performance in the Gulf region and Egypt.
Wow, 43%. That's mind-blowing. What's driving that phenomenal growth in MENA?
A few key things are contributing to their success there. First, they recognized the strong demand for ethnic hair care products in the region and adjusted their products to meet that need.
So understanding the local market is crucial.
Absolutely. They've also built a strong distribution network in the region by partnering with local distributors and retailers.
And their efforts to build brand awareness seem to be working?
Yes, their recent marketing campaigns have done a great job of raising brand awareness and attracting new customers.
Okay, so they're doing very well in Mana. How about South Africa? How are they performing there?
South Africa is another market where they've got a solid footing. They posted a healthy 20% growth in constant currency terms in Q2 FY25. Their hair care and healthcare portfolios are leading the way there.
What's the key to their success in South Africa?
Just like in their other markets, they've focused on understanding what South African consumers want and tailoring their products accordingly.
Localization is a recurring theme in their international strategy.
It is. And their recent efforts to expand their distribution network and strengthen their brand in South Africa are adding to their growth momentum.
Okay, so Marico's international business seems to be a well-oiled machine, consistently delivering growth across different regions.
Yes, their global operations really demonstrate their ability to adapt to different markets, understand those local nuances, and build strong brand equity.
Now let's look at their overall financial performance for the first half of FY25.
Their consolidated revenue growth for the first half of the year was in the high single digits. Currency fluctuations in some of their overseas markets impacted this growth a bit, but they're expecting that consolidated revenue growth to reach double digits in the second half of the year.
A strong finish is on the horizon. What about their operating margins?
Their operating margin for the first half was comparable to the same period last year. But they are facing some pressure on margins because of higher than expected inflation in copra prices, the raw material for coconut oil.
Mm.
And the recent increase in import duties on vegetable oils isn't helping either.
So managing those rising costs will be a big focus for them in the second half of the year.
Absolutely. They've indicated they'll be taking measured steps to adjust prices, to counter the impact of those rising input costs, but they're still committed to achieving their revenue growth targets.
Okay, let's talk about their longer-term growth outlook. What are their goals and what strategies are they using to get there?
Their medium-term goal is to consistently hit double-digit revenue growth. They plan to achieve this through organic growth in their core categories, accelerated growth in their foods and premium personal care portfolios, and sustained double-digit growth in their international business, even after considering those currency fluctuations.
It's a multi-pronged approach to growth. What specific actions are they taking to drive this growth?
Domestically, they're focusing on strengthening those core categories. They're doing this through initiatives like Project C, which we discussed earlier, and by working to boost the profitability of their general trade partners, the people who are key to getting those products to consumers.
So deepening their reach and supporting their partners are critical strategies.
Exactly. They're also aggressively diversifying by expanding those foods and premium personal care portfolios. The goal is to double the size of their foods portfolio by FY27 and double the exit annual run rate of their digital-first brands by that same year. Remember, that exit annual run rate is basically a projection of their future revenue if everything keeps going as it is.
Ambitious goals. Do they expect these new segments to contribute a significant amount to their total revenue?
Absolutely. Their goal is for foods and premium personal care to account for around 25% of their total revenue by FY27.
That would be a big change to their revenue mix. But we've talked about how rapid growth can sometimes impact profitability. How are they planning to balance those two things?
You're right, that's an important point. They're very aware of the need to balance growth and profitability, and they're really focused on making sure both their foods and digital-first brands portfolios are profitable as they scale up. They've already made big improvements to their food supply chain and go-to-market strategy, which has significantly boosted their gross margin in FY24. They expect that to continue as they refine things even more.
So efficiency and optimization are key. What about the digital-first brands? Are they on a similar track?
They are, yep. Beardo is expected to hit a double-digit EBITDA margin this year, and they plan to replicate that success with their other digital-first brands. The aim is double-digit EBITDA margins across the entire portfolio by FY27.
That's a great goal. What about their international business? What are their plans there?
They want to keep that double-digit growth going internationally. They're aiming for double-digit growth, even with those currency fluctuations. The plan is to diversify their product offerings even more, move into new markets, and continue to grow their market share in the markets they're already in. Bangladesh should keep growing at a double-digit pace, and MENA and South Africa have a lot of potential for expansion too.
It sounds like Marico has a very clear path forward. Okay, Before we move on to the final part of our deep dive, let's recap the key takeaways from our discussion about Marico's financial performance and their strategy for growth.
Great idea. The first thing is that their consistent revenue growth, both domestically and internationally, shows they're adaptable and resilient in this changing business environment.
They've handled those tough macroeconomic conditions really well.
Their focus on innovation, whether it's new products or new ways to reach consumers, has been a big part of their success.
Right. They're not afraid to try new things, which is so important these days.
Their aggressive diversification strategy, especially their expansion into foods and premium personal care, is setting them up for long-term sustainable growth.
And their commitment to building a business that's both profitable and sustainable is admirable. They're not just chasing growth, they're building a business that benefits both their customers and their investors.
I agree. That long-term vision shows in everything they do.
We've covered so much in this section. Now let's move on to the final part of our deep dive. We'll discuss some key insights and takeaways you, as our listener, can learn from Marico's success. What are your thoughts so far? What resonates with you about what Marico is doing?
It's
All right, we're back for the final stretch of our Marico deep dive.
time to wrap things up.
We've gone through those financials, broken down their strategies, and even explored their global footprint.
Lots of ground covered.
So now let's zoom out and see what the bigger picture looks like.
Yeah, let's connect those dots, see what we can learn from Marico's success story.
For you, our listeners, what are those key takeaways? What stands out to you from Marico's journey?
Well, for me, Marico really shows how important it is to be adaptable and innovative, especially in this kind of ever-changing business environment.
It's pretty inspiring. They've really turned those challenges into opportunities.
And that strategic focus on diversification,
Yeah.
that's another takeaway. They're not just resting on their laurels, content with those established products. They're out there actively looking for new growth avenues, pushing into new segments like foods and premium personal care.
And doing it strategically, I might add. They're not just randomly throwing products out there. They're acquiring brands that really fit with their overall vision, then seamlessly weaving them into their operations.
Absolutely. And that commitment to profitability is impressive. They're not just chasing growth for the sake of it. They're making sure these new ventures are profitable, contributing to their overall financial health.
It's a good lesson for all of us. Grow, yes, but grow sustainably.
Exactly. And their success with those digital-first brands really highlights how quickly they can adapt and embrace new technologies. They're not afraid to experiment, which is crucial in this fast-paced digital world.
They've got that startup mentality, even within a large, well-established company. They're always innovating, pushing those boundaries.
And let's not forget their international expansion. It proves that Indian companies can compete and succeed on a global scale.
They've truly gone global. Their success in all those different markets, Bangladesh, Vietnam, MNA, and South Africa, shows just how adaptable they are to different cultures, consumer preferences, and business environments.
Oh, and their commitment to ESG is worth mentioning too. They're not just focused on profits. They're working to reduce their environmental impact, promote sustainable practices, and empower communities.
It shows businesses can do well while doing good.
Absolutely. Marico demonstrates that sustainability is more than just a buzzword. It's a business principle that can create real, lasting value.
We've seen how Marico is changing the consumer goods landscape. But here's a final question for our listeners. Given their ambitious diversification strategy and success in those new areas, like foods and digital-first brands, what do you think this means for the future of the Indian consumer goods market?
And how might it impact your own choices as a consumer?
We encourage you to check out those sources we used, head over to Marico's website, and really delve deeper into their story.
Understanding these trends can help you make smarter decisions as a consumer and even spot new opportunities.
And with that, we wrap up our Marico deep dive.
We hope you found it informative.
And thought-provoking.
Until next time.
Keep exploring, keep learning, and keep diving deep.